Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live this Tuesday morning from the CNBC-TV18 Motilal Oswal studios. I am Prashant. With me, as always, my colleagues Sonia and Nigel. Morning, guys.
Morning.
Hi, good morning. Anyone watch the match last night?
Couldn't stay up. Missed it. Saw the first part of it and I saw the last 2-3 deliveries. So I saw the win. But it was a cracker.
It was. I saw the highlights on social media and all of that. I couldn't really catch the match. By
And the way
virtue
it
of
was,
coming early this morning
and
here.
the point is that the way it was pouring, I saw till the time that it was raining, and the way it started pouring, the winds and the rain, and I thought, well, it's a goner. I don't think they'll play this out in the night. And this morning I woke up and there were, hundreds of messages on WhatsApp groups, cricket groups, and just quite amazing, befitting for a final, right?
I think there was that one image, right, of Dhoni and Jadeja. There was that image which is, I think it's gone viral, and it's... it's great. Chennai's win was great, and all of those moments just capturing the energy of the IPL, it's stunning.
And it appears we have one more season of MS Dhoni. It appears so.
Yeah. That was, I think, the highlight.
That's left open-ended.
People were waiting with bated breath, and he did not disappoint. He said, well, this is a gift from me to the fans for the love that they've shown me. And maybe
in batting performance, he disappointed yesterday. But otherwise, he's not.
Yes, Nigel. That's MS Dhoni.
First ball
At the end of the day, it's his 5th IPL title, right?
Yeah.
That's spectacular. Okay, but we're going to keep talking about the IPL, but lots to talk about the market as well. The markets are not too far behind. We're also at the cusp of a new high.
We are, but US markets were shut, Sonia, right? So I think it's actually, we should have had an IPL discussion with an expert. But, so no real cues from US. Stock markets closed overnight, but S&P E-mini futures are up about a third of 1% or so. But the fact is, there's no follow-up. And we saw this during Asian trade yesterday, during European trade yesterday as well. Futures in the US futures were higher, this much of a third of 1%, but they were not building on. Now, the text of the U.S. debt ceiling deal, which was agreed between the U.S. administration, the White House and the Republicans, came out yesterday. And, the reading of it by economists, etc., shows that there is a very modest macro impact. Why should there be a modest macro impact? The deal perhaps will get done, as we've been saying for weeks. It needs to be signed into law, and that will perhaps happen tomorrow or day after in the U.S. But what after? Because, there will be an agreement to cap all non-defense spending at a certain level, last year's level, etc. So the government cannot spend more, which perhaps will impact the GDP. And the reading of that impact is that it's going to be pretty modest. So that's something new, which I thought we should point out. Now, the markets here, the rally continued yesterday. And we on the Nifty Bank made a new all-time high. The Nifty is not very far away from a high. Towards the end, towards the close, we saw some profit booking. The Nifty came off about 30-40 points from the highs. The banks actually saw a little bit more in terms of a pullback. In point terms, I think we saw about 170 on point pullback for the Bank Nifty from the high point. Now, where do things stand this morning? On the way up for the Nifty, I think we left off at 18,600. On the way up, the near-term upside level is about 100 points out. That is 18,730 is the near-term upside level that the market perhaps should target. On the way down, the Nifty should not break or rather fall back under the previous high, which was 18,420. There is a 20-day moving average as well, but that is way under. So 18,420 perhaps is your line in the sand under which, I think people will start to get a little nervous. Bank Nifty, for 10 days, it has been knocking at that 44,100 level, right? Full 10 days. And yesterday it broke out of this consolidation, congestion zone, and it was a surge. It broke out with a gap. So very naturally, supports for the Bank Nifty come in that gap area, which is nothing but the low yesterday, the gap between the low yesterday and the high the day before yesterday, which is 44,067 to 44,193. This is the immediate zone of support which the market should hold on to. And as I've been saying, for both the Nifty and the Bank Nifty, the 20-day moving averages, which are a little below, those should be kept as complete trailing stop reversal levels. hopefully those should not be hit. Maybe we get a bit of a consolidation. The market's done quite a bit. And of course, now we are heading into the US debt actual vote. An agreement has been made, but this needs to go through both the House and the Senate. And if there is a sort of slip between the cup and the lip, I mean, the markets will go into a bit of a tailspin. So, and that perhaps is the reason why US futures did not react in a very exuberant way. Friday's reaction in the US was very strong. Last night was, nothing. Last night was a holiday. And today we will see if there is any follow-through in the US as well. That should provide us additional cues. ASX Nifty is absolutely flat, little over 18,700. Sonia.
Oh, absolutely. And the momentum is intact, right? I mean, you can see it in the ticker. You can see it in the way the market is moving. I was speaking to a few market experts yesterday, and they were saying that at this point in time, the Fed is not indicating any rate cuts, right? But at some point towards the end of 2023 or at the start of 2024, rate cuts will come. And the market globally perhaps is starting to price that in, that optimism. When the Fed turns, at that time it may be too late to jump in. So perhaps a lot of, bullish market voices are starting to price that in. So that's one thing. Of course, the market has already gained 2.5% in the last 1 month. So the Nifty has done a lot of the good work. And now we're less than 300 points away from that all-time high. So we're at the cusp of that, 18,888. Yesterday, it was a 5-month high. The Bank Nifty is at a record high as well. And both foreign and domestic investors continue to buy in the market. So one thing which is very strong is liquidity, both from the domestic as well as international fraternity. Yesterday, there was about 1,800 crores of buying by FIIs, and DIs bought almost 900 crores as well. The US markets, although they were shut yesterday, have traded with strength. The government has reached that US debt ceiling deal, so that's the big optimism over there. But for now, all eyes will be on these new highs. And even if we do get there, yes, a little bit of profit taking won't harm anyone. A little bit of consolidation could come about. But I think the trend definitely for the near future is on the upside.
Well, that's right, Sonia. We could be bracing for some near-term consolidation. Yeah. But the trend is still on the upside till, say, the 20 DMA breaks on the downside. And for the Nifty and the Nifty Bank, that's close to around 1.7 to around 2% away from current levels. Yesterday as well, you did see the Nifty end higher, and a couple of large cap stocks did well. Mahindra and Mahindra, your Titan, both of them did pretty well. The Nifty Financial Services Index, that plays out the weekly expiry, so that will be a crucial factor to track, particularly in the second half of trade. Now, yesterday we highlighted this marker that the PCR had moved to the upper end of the range. But today, just looking at the India VIX, normally they move in an inverse direction. If the Nifty moves up, the VIX cools down. But it appears the IVs on both sides are moving a little higher. Maybe we have a couple of big events that are coming, so that's why they moved up. So that's just something that you should take note on. Sometimes it's a word of caution, but it was up only around 3.5% or thereabouts. What did the FIs do? Well, they added some short positioning, but the shorts are only at around 40%, so they continue to remain net long on the index. On the option side, well, they bought puts. They bought more puts than calls yesterday. The problem is that they're writing calls as well aggressively. So at higher levels, you're likely to see some supply that could come in. Let's pull up two active strikes yesterday, and there appears there's a bit of an option, a strategy that's playing out. It's known as a short straddle. What is it? You write the call as well as put of the same strike. That's the 18,600 call and the 18,600 put. Club the premium. Those that are playing the strategy, they'll pocket close to around 150 to around 160 rupees. And they are hoping that the Nifty will be in this range. So 150 points higher than around 18,600, 150 points lower than around 18,600. So that's why you're getting the broad range on the Nifty itself. They're bracing for next few days that we hold on to this range, and that's why I'm calling for some consolidation on the Nifty. But the Nifty Financial Services Index, that's going to be the crucial factor in the last 60 minutes. Particularly, it's not really played out that way in the last couple of series because it's not moved that much. But on the upside, you're seeing some resistance levels because in 19,600 call, 19,650 call, both of them are very, very active. And plugging in the premium, you have your resistance zone. So we're close to around 0.5% away from those levels. That will be a resistance zone. And the bears are positioned that we don't get past that mark. SGX Nifty is suggesting some green to kickstart trade. I think we're in this range of around 300 to around 400 points till we break it. So let's see how this goes.
All right. Nigel, we'll keep an eye. Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets across the globe. Matt Orton of Raymond James Investment will join in to discuss the global setup. Our research team will get you CNBC-TV18's list of top 10 stocks for the day. At 8:30, we do a fundamental stock check with Sanjeev Bhasin of IIFL.
Okay, well, we have a couple of big calls coming in this morning. Well, the markets make opinions, as we know. So, a lot of opinions coming through. The markets at the cusp of a new high. First up, we have Rhythm Desai of Morgan Stanley, who says that this India is different from what it was in 2013. In a short span of 10 years, India has gained positions in the world order with significant positive consequences for the macro and market outlook. There is significant skepticism about India, particularly with overseas investors who say that India has not delivered its potential despite it being the second fastest growing economy and amongst the top performing stock markets over the past 25 years. However, such a view ignores the significant changes that have taken place in India, especially since 2014. Morgan Stanley highlights the 10 big changes which are mostly because of India's policy choices and their implications for the economy and the market. These include supply-side policy reforms, formalization of the economy, Real Estate Regulation and Development Act, social transfers to beneficiaries, insolvency and bankruptcy code, flexible inflation targeting, focus on FDI, India's 401k movement, the government support for corporate profits and MNC settlements at multi-year highs. Okay, so lots of positive views coming through now.
And, Sonia, their view is that corporate profits as a share of GDP, because of all of this, will rise. Yeah. That's the interesting bit. Well, let's stick with, the more views. Indranil Sengupta, who's the strategist and economist at CLSA India, has this to say. He says, and I quote, investors need to track 3 macro data points this week. CLSA has raised FY 23 GDP growth forecast to 7.1% from 6.9%. While on the other hand, the bad news is the trade data will continue to show exports are contracting with the global slowdown. This supports their call of FY 24 growth slowing to 5.5%. He adds that they are at CLSA following the Southern Oscillation Index to see if El Nino is forming, and that has dipped to minus 13.6% on May 27, well below the minus 7 threshold. Although the Met Department is retaining, at least for now, its normal 96% of average rain forecast.
Okay, that's an equity and a macro view for you. On the rupee, it's still trading around that 82.54 to the dollar mark, so very close to around 83. Let's get you some views for the day. Abhishek Goenka of IFA Global says we are in the middle of an unprecedented low carry, low volatility environment in the dollar rupee. The RBI wants to keep the monetary policy conducive to domestic growth inflation dynamics rather than follow the US Fed. This has resulted in narrowing of interest rate differentials, which can give rise to forex volatility. The RBI's endeavour seems to be to use the reserve buffer to manage currency volatility. He adds that the RBI has accumulated reserves around 8160, and now we can see the central bank use reserves to defend the 8290 mark. Given supportive current and capital account dynamics, Abhishek expects the rupee to trade in a range of 8160 to 8290 over the coming few weeks.
On bonds, Ajay Magnolia of JM Financial says that fearing another rate hike in June meeting, supported by the macro data print, uncertainty is driving the market and not allowing it to rally. The rise in global bond yields are having some spillover effects on Indian bond yields, which are trading in the upper band of the narrow range. Cutoff on SDL supplies is likely to be a bit higher as compared to last week. In the absence of any major triggers for the market, they expect yields to react to the movement in global bond yields. For the Indian 10-year benchmark, Ajay sees 6.99 to 7.04% as the range for the day.
Well, we have a lot of stock-specific action that we're tracking for you. It's the final day of earnings, so plenty of earnings coming through, and we'll get to that in just a bit in our special Top 10 segment. But let's run you through the list. We're looking at NHPC, Heikel, Shobha, ISGC, Heavy Engineering. They are stocks on the back of positive news flow, while we have more stocks that could be reacting to negative news flow. The list includes Torrent Power, RVNL, IRCTC, Campus Activewear, Jubilant Pharma, and Heidelberg Cement as well.
All right, Matt Orton is Chief Market Strategist at Raymond James Investment. He's joining us now. Matt, good to have you with us here. Good morning. What is the latest? And the market overnight was closed, but what's the latest on this debt thing? Debt ceiling.
Hey, good morning.
It'll be put to a vote. Do you expect it to pass without a hitch?
Good morning, Prashant. And it'll be interesting. I mean, can always be drama in the Senate and the House, but I fully expect to see a deal pass. no politician besides the few that have already drawn lines in the sand want to be the reason why the U.S. goes into an economic catastrophe by defaulting on its debt. So it's highly unlikely we see any fireworks. It's going to be nice to move past the distraction of the debt ceiling. Friday market action, a lot of it was already priced in. It seems like the impact to the overall economy is going to be fairly benign. So that's definitely encouraging as well. And I think what this finally allows investors to do is refocus on the economic data that's been coming in, which has been stronger than expected. And it also puts all the focus on the Fed and the incoming data we have this week. We've got jobs report on Friday. If we continue to see robust jobs growth in the U.S., that continues to put pressure on the Federal Reserve. It's not my expectation.
There is one narrative, Matt, that, the pricing pressures that we're seeing currently will swing from inflationary to deflationary towards the end of 2023, purely because of, the unwinding of the pricing spikes that we saw that were caused by supply constraints. Okay, we'll get back to Matt in a bit. I think, we lost that audio with him. But that seems to be the narrative, that if the pricing pressure swings from inflationary to deflationary, then there'll come a point when rate cuts could be announced by the Fed, and perhaps the market is pricing that in. Okay, Matt, welcome back. I think we lost you for a second. But are you at any point in time over the next 6 months looking at the start of a rate cutting cycle from the Fed? And if you are, then is this a great time to be topping up on equities?
So I think within the next 6 months, the Fed's going to be hard-pressed to cut interest rates because the rest of this year, the economic outlook still looks pretty positive. My base case has always been a scenario of rolling recessions through the economy, where different sectors and industries are going to feel the impacts at very, very different and lagging times. And we're seeing that play out a little bit right now. But in order for the Fed to cut rates, you've got to see the tightness of the job market ease. We're not seeing that conclusively. Inflation is certainly coming down, but there's persistent pressures. The housing market hasn't cratered. I think there's structural supply and demand imbalances that have led to that. And as a result, the Fed's going to have to keep its foot on the brake for a little while longer. And until you really start to see that more severe weakness come through, or conclusively that we're on the path towards 2.5% inflation, it's going to be hard for the Fed to cut. So my base case is later in the first half of 2024 is when we might start to see the first rate cuts.
Hi, Matt. Good morning. The last time we chatted, I think you were in minority. Now it appears most on the street are indicating that we'd like to see another rate hike. And maybe, in fact, the cuts come only in 2024. So it appears you're getting that call right as of now. But let's focus on markets and Asian markets ex-China. You like quite a few of those. Tell us, where does India come in? Because I'm just going through your note. You like markets like Taiwan, Korea, Philippines, Indonesia as well. When does India come in the pecking order? Valuation-wise, are we still too expensive for you to go all out?
Yeah, Nigel, we talked about this the past few times that I've been on, and I've been getting progressively more bullish on India because the fundamentals are there. Earnings have largely been positive, and we've seen continued strength through some key parts of the overall economy. And I think over the past month, what's really most encouraging about the rally that we've seen is that it's broad-based. It's happening across cyclicals and some more secular growth pockets of the market. So you're seeing banks, you're seeing even information technology. I hadn't been that positive on IT and IT services, and we've seen bottom. We've seen a lot of those companies coming out of consolidation, and that's encouraging to me. So India is moving up pretty close to the top. I would tell investors right now to use any downside a little bit more opportunistically. We're heading towards breaking through, the December highs of last year. And if you do that conclusively, I think you'll continue to see some more upside. But I would be careful about maybe dollar cost averaging your way in, not chasing the market higher and picking your places. But I still like Asia ex-China as well. So Taiwan, South Korea are benefiting from the AI trends. Semiconductors have done well, but banks in those countries have also done well. The dollar's also helped, or at least a relatively, flat trend line dollar has been somewhat beneficial too. And you've seen a little bit of weakness in countries like Indonesia and the Philippines, where I think the economies are solid and benefiting from that China reopening. So those also look interesting. But overall, emerging markets, picking your places has worked quite well this year. And I've been telling our clients, it's all about how you select where you are in the market. Even though markets have been narrow, you can still outperform by diversifying and picking and choosing your spots.
Okay, well, on that optimistic note, we will let you go. Matt Orton, thanks a lot for joining in and speaking to CNBC TV18. Let's take a quick break. On the other side, our entire research team will be with us to help us with the top 10 trades for the day. Stay tuned.
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell, right at your fingertips. Making gold your strategic advantage.
Without which, your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
This car's electric for more reasons than just being woke.
Oh yeah.
And man, the money it saves you is no joke. It's got enough range to get you anywhere!
And it's the go-to park when you get there.
The all-new MG Comet EV, the no-nonsense car.
Because just like us, this car cuts the crap, man.
नई कार खरीदने से पहले एको चेक करें और 36,000 तक बचाएं।
हमारी प्रार्थना होगी स्वीकार। Zedlac Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
Welcome back to Bazaar Morning Call, where we have a lot of stocks in focus and we have our entire research team joining in now to help us prep for the day. So let's get straight to it. Vivek is here with us first up to tell us how Torrent Power and NHPC's numbers looked. He's also tracking RVNL, by the way, this morning. Vivek, over to you.
Well, that's right. Quite a few results to keep track of. So Torrent Power is the first on our list. Year-on-year, optically, it's a very strong set of numbers. However, sequentially, there's some softness seen as far as all of the operational metrics are concerned. Looking at the numbers, revenues are up almost 61%. Multiple acquisitions that the company has done in this particular quarter have gone ahead and aided the revenue performance. EBITDA is higher by 10%. Margins, however, have contracted on a year-on-year basis, 18.1 versus 26%. Net profit of 450 crore versus the loss seen last time around. Multiple provisions were made by the company last year around. However, when you're talking about sequentially, revenues are down almost 12%. EBITDA is down almost 32%, and profitability too is much lower on a sequential basis. Key highlight from the company this particular quarter, contributions largely from the distribution business is what has aided. Along with that, the LNG trading gains is also something that has gone ahead and aided the operational performance this time around. On the other hand, talking about NHPC, it's a very good set of numbers from the company this time around. Revenues higher by 21% on a year-on-year basis. EBITDA up 72%. Margins also very strong, almost over 1,000 basis points expansion, and net profits up almost 38% on a year-on-year basis. RVNL, it's been a soft quarter from the company this time around, mainly on the back of the fact that the order book execution is something that continues to remain a bit of a soft point. Revenues down almost 11%, EBITDA down 8.3% on a year-on-year basis. Margins are steady at 6.6%. Net profits is down almost 5%. Expect some red on the stock today morning.
Okay, all right. Thanks a lot for that, Vivek. Well, let's hop across to Mangalam. He's tracking a couple of companies, IRCTC, Campus and ISJEC. Mangalam, tell us more.
Well, we start with IRCTC. Well, the revenue for the company grew around 40-odd%. The EBITDA grew just 16.5%. And that's because, the share of their lower profit businesses are coming back as normalcy returns. Back in the day when there were COVID-related issues, it was only the internet ticketing business that did well for them. But now the other businesses are coming back. But remember, it's the internet ticketing business which accounts for most of their profitability. And out there, the business was flat. So internet ticketing saw a revenue growth of just 0.8%. And the EBIT out there declined by about 3%. So see some negative out there. The net profit, of course, was aided by an exceptional gain of 25.8 crores. So see red on IRCTC. Poor numbers coming in from Campus. In fact, one of the worst in this sector. 1.3% decline in their revenue. We're seeing the EBITDA down by about 28%. And the net profit out here is absolutely flat, but that's largely because tax expense for them is come down from 34 crores to around 6.9 odd crores. So, for Campus, I see red. And finally, as far as ISGC is concerned, strong performance coming in their machinery manufacturing equipment business, and their sugar operating profit actually near tripling, as a result of which their revenues grew by about 28%, led to an EBITDA growth of 55%, and the net profit for them jumped all the way to 86 crore versus 37.6 crores. So see big green in ISGC.
All right, Mangalam, thanks very much for that. Now, more numbers. Jubilant, Farm Nova, Hikal, Sobha, Heidelberg. Sonal has got that list. She's joining in. Sonal, morning.
Good morning, Prashant. Let me start with Jubilant Pharmova, which was a weak set. While the revenues were higher on a YOY basis, EBITDA declined to 219 crore rupees. Margins were lower by 300 basis points on a YOY basis. This time around, the company in fact reported a loss of 100 crores versus a profit of 59 crore rupees, which was because also that the company took an impairment charge of 100 crore rupees related to certain intangible assets. On a YOY basis in the balance sheet, the net debt has also increased to 2193 crore rupees. Hikal, on the other hand, after many quarters of weakness, there are some green shoots here. Revenues were up 9%, EBITDA was up 48%, margins expanded by 400 basis points, and profits were higher by 74%. For Sobha, it was a good set. We already knew the operational update where they reported their best ever quarterly numbers in terms of bookings. Collections also were up 10% on a YOY basis. Their net debt came in at an 11-quarter low of 1,640 crore rupees. This compares with 2,337 crore rupees in the year gone by. So expecting a green tick there. For Heidelberg, volumes continue to remain a concern. That is where growth is not coming. Sales were down 3% for the company. EBITDA was down 42% and margins were lower by 800 basis points. Expect Heidelberg to be in the red today.
Okay, thanks a lot for that. That's a pretty exhaustive list. And I think Sobha stands out from that. So let's see. Could be one of the big stocks of the morning. But these stocks have rallied quite a bit. And there are a lot of big numbers today as well. So we'll track that very closely. Here's a quick recap of our top stocks. Stocks with positive news flow. There's NHPC, Hikal, Sobha and ISGC Heavy Engineering. While stocks with negative news flow, there's Torrent Power, IRCTC, Campus Activewear, Jubilant Pharmova and Heidelberg Cement. But Manisha Gupta joins in now for a roundup of all the action from the commodity markets overnight. Manisha, hi, good morning. What's been happening there?
Sonia, thank you for that. I'll start with metals, and we've seen a strong rebound come in for many of them. And copper is off at 6-month lows, and markets are looking at inventories declining. And the debt ceiling going through has been, of course, a big positive. Even as the dollar index is trading at 104, we've seen buying return. Yesterday was a weak day because the US and UK markets were out of action. But Asia, yet again, is looking at buying, and that also on back of strong volumes right now. So it's not just copper. Steel is off at 3-year lows. Iron ore prices have surged up almost 4.5% overnight. So metals as a sector is doing well, and so is the case with energy, where the crude oil prices are holding at $77 a barrel. Markets will watch out for the June 4th OPEC meeting and the OPEC and allies output in sense of their demand and supply reports for the year going forward. As of now, we know that OPEC and allies are cutting 3.6 million barrels on a daily basis. So what does it mean for the month of May and going forward is what we'll understand in this week. Until then, buying continues.
All right, Manisha, thanks very much for that. Commodities and oil specifically in focus. We'll come back. Sanjeev Basin of IIFL will be joining in with some fundamental stock check. We'll also connect with the management of Stovekraft to talk about their fourth quarter earnings. Stay tuned. Conversations follow.
नई कार तुमने कार इंश्योरेंस खरीदा होगा एगो ऐप से नहीं आपको नहीं तो कोई बात नहीं मूर्ति गलतियां होती रहती हैं कोई जरूरत नहीं है चेक करने नहीं मूर्ति कोई जरूरत नहीं
नई कार खरीदने से पहले एको चेक करें और 36,000 तक बचाएं।
What if you could make analyzing a big bank's data no big deal?
Go on.
Well, what if you partner with IBM and Red Hat, use a hybrid cloud solution to connect data across multiple systems globally, then analyze all that data with Watson?
Okay, but this needs to meet our...
Security standards? Yep.
Compliance standards?
Mm-hmm.
So they get the insights they need.
Yep.
In real time.
Check.
To make quick decisions.
Check.
And check.
That's the hybrid cloud solution IBM and a global bank created. What will you create? IBM. Let's create.
चीज़ डोसा मसाला डोसा पेपर सादा डोसा रोटी बटर नान कुलचा वेज कढ़ाई वेज कोला स्टीम राइस जीरा राइस फ्राइड राइस
भैया और कोई ऑप्शन?
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस। इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग। एक्सप्लोर करो ऑप्शन स्टोर। Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
We don't just design new cars. We create new ways to design all cars. In fact, we make the whole world of India's mobility. New forever.
Dadu,
yes?
What does premium mean?
Beta, premium you can say is like petrol. The car will keep going till the time it has petrol. Once petrol is over, the car stops.
But Dad, this time even if the petrol is over, our car won't stop.
How come?
With LIC's Jeevan Labh, even after the premium payment tenure is over, the policy's benefits continue.
That means our journey of happiness will continue non-stop.
LIC, हर पल आपके साथ।
All right, welcome back to Bazaar Morning Call. Well, we have a lot of companies on our radar, but the first corporate interaction, it was a weak quarter for Stovekraft. The EBITDA margin was at a multi-quarter low. The employee expenses as well as other expenses have risen, while their short-term debt also doubled in FY23. Rajendra Gandhi, who's the MD at Stovekraft, joins us now to talk about that. Mr. Gandhi, thanks a lot for joining in. I wanted to start by asking about what went wrong this time, because your expenses have gone up significantly. Your EBITDA margin is at a multi-quarter low. Can you tell us for FY24, first on the operational front, do you see more pressure come through? And if yes, what would the target margin band be for the full year?
Yeah, we are witnessing low demand in the market compared to what the business was planned to. And so the revenue numbers for the quarter were not up to the expected plan. And hence, there is a decline in our margins. But related to that, we have grown in every segment of the product segment that we cater to. We have grown at about 19% on our pressure cooker segment. We have grown about 16% on our non-stick cookware segment, about 13.5% on the induction cooktop segment, and also the appliances have grown by 11%. So we have witnessed growth in each of these segments. Overall, the company grew by 13%. It was driven by a 3% increase in margin and 10% increase in volume.
Mr. Gandhi?
So we have no pressure on the growth side, but the planned growth did not actually while there was a very tepid demand in the market, all of our robust distribution network could not meet the number that we had planned to, and hence there was a cost increase. The cost was planned and designed for a larger revenue number for the quarter, and hence the decline in the market.
Mr. Gandhi, can you help us with the exact volume number? What was the growth? You said that, the demand is very tepid. Going forward in, say, the first half of FY24, what are you expecting in terms of volume growth? Will it be single digit? Will there be any growth at all?
No, we continue to, we are very bullish on the growth of the company, both for each of these channels. Particularly in the last year, we grew on all offline channels and our export channel. We had a flat or absolute no growth on the e-commerce channels, but even the e-commerce growth has come back. So we at the company, we are experiencing good growth. But of course, I'd also want to share that the markets are not as strong as one would aspire it to be. The markets are weak, but we are able to grow.
All right, Mr. Gandhi, good morning. Nigel on this side. I recall that the last time we chatted, you said that you're looking to take the margins to around 11%. Now, in the past quarter, other expenditure was higher as well as employee costs, maybe some one-times as well in there. And that's why the margins are only around 2%. But could you tell us, given that demand is weak, so operating leverage may not play out, for FY24, what kind of a revenue growth are you looking at on this base of around 1,300 crores? And what does it mean in terms of margins from here on? Give us a broad band.
So let me also share with you that we have grown on our gross margins versus our previous year. We have grown by almost a percentage on our gross margin. We have further taken actions to improve our gross margins. I understand, of course, there are new costs that we have built to strengthen our team, to both on the sales side and the manufacturing side. There is a pipeline of products that have been planned or being produced now within the factories of Stovekraft, and they will all start delivering. So there is a cost that has been built for a larger revenue, but we are very confident to get to that number. And when these numbers happen, these negative bottom line margins will cease to exist.
Mr. Gandhi,
we are working.
Mr. Gandhi, sorry to come in out here, but as you mentioned, gross margins have improved, which is good, but you're building a new team, and that's why the EBITDA margins haven't really expanded as much as planned. But the vision is to get to that double-digit margins. So which quarter will you get to those double-digit margins? Second half of this year, quarter 4, when does that happen? And give us a broad top-line growth. Given the demand is tepid, will it be single-digit, will it be double-digit revenue growth? 2 numbers I'm looking for.
We are confident of a double-digit growth. The CAGR growth for the company has been, for the last 5 years, has been at 19%. It is far higher than the industry peers. And we are confident to continue this growth even this year. Of course, the last year had a 13% growth versus what we would have aspired to be a little closer to the 20%. But the CAGR is 19%, and we believe we'll be there. And regarding the growth,
margins.
The margin coming back to 11%. See, for us, the first quarter is a smaller quarter. The second quarter and the first quarter combined are more or less quarter. The first half is closer to that 50%. So we believe at the end of the first half, we'll be back at that 11%.
Mr. Gandhi, just talk to us a little bit about that, what you started with, which is the demand in the market is weak. What is that? Does that seem to be a bit of a... Because I think last time you were on, you'd spoken about that. We've had the management of TTK Prestige over the last many months. They've also said, at one point they said they're diverting some of their local production to exports because local market is not that strong. So this seems to be an overall industry issue. Just your sense.
I think the base was larger, and if the markets, if the demand was normal, our growth would have been much larger. So I can say that we have a robust distribution network in place. All our offline channels have grown tremendously last year. So if I give you some number, we grew by 17% on our general trade. We grew about 14% on our modern retail. We would have otherwise grown at higher of 20% even on trades. So the markets are soft. Definitely there is a softness in the demand, and also because of the base that we would compare with the COVID years. While COVID years were not good for the world at large, but the cooking business did take a upstick during the COVID years. The base is maybe what is affected.
So, Mr. Gandhi, quickly, if you can tell us, do you see more pressure on your debt? Your short-term debt has actually doubled this year. More pressure over there?
No, this is all. See, we had a planned capex based and anticipating the bottom line numbers, and the planned capex have been executed, and we have not generated enough money, and that's where you see a rise in debt. There is about 70 crores of capex that we did, and about 25 crores of advances that were paid for the capex for this, and we did not generate all that money that we spent, and so you see a rise in the debt. But we are conscious of this, and in the next 3 quarters, we are very confident that we'll bring it down at least to the level where we were.
Okay. All right, Mr. Gandhi, thanks a lot for joining in, and all the best. That's Stovekraft. They've actually seen a lot of pressure in earnings. Debt has gone up, and they're saying the demand is not that great either, in fact, on the weaker side. But let's get Sanjeev Bhasin, Director at IIFL Securities, who joins us now. Sanjeev, good times for the market, almost at all-time highs. And of course, this was something that you've been saying all along. So 3 cheers to that. But what now? From here on, do you see the market build on to the gains? And what do you do? What are the stocks that one should be looking at now?
Yeah, good morning, Sonia. Very good times and good to be on the show with you. And I've been saying that last 2-3 times you were not there, and I've been telling them, Prashant particularly, that we are headed to new highs. Bank Nifty has done it. Now, till all the bears throw in the towel, market is not going to stop. Now, whether it's 18,800 or 19,000 or 19,500, I don't know. But till 15th of June, markets are in fine shape. Results are good. Macros are good. The debt ceiling is done with. Foreign flows are the most unwanted guys are the biggest buyers. So where is the pessimism? The pessimism lies in under ownership. And Sonia, it's easy to say you time the market. It's impossible. Only 2 people can time the market. One is God and the other is a fool. So staying invested is the only mantra in India. And we are continue to think that we are going to drive higher on growth on specific sector stocks. But you can see the feeling of missed out being humongous.
Okay, so you timed the market, right, this time? You got it right. So
three people then.
So which one are you then? Or are there 3 people
Sonia,
who can time the market?
No, Sonia, my bread and butter, I do this 365 days, 24/7. So I need a lot of God's grace and, a lot of good wishes because being positive on India will only create wealth. It is easy to say I'll buy at 17 or 16. But it only those people, Sonia, who saw the 22nd December 18,800 and stayed invested for the last 6 months are going to hold their positions. So it's not a question of when you enter or exit. That's the short-term view. The longer-term view remains that Maruti is at 9.5 and going to 12,000, but only if you owned it. So ownership is the key, just as you own gold. Gold is owned because of ladies like you who have it in the emotional part. You will part with anything but not with gold. That's why gold is at 61,000 and so is the index at 63,000, sorry. And that is called creating an asset over 50 years. And that is what India is.
Sanjeev, I think you got this the metal wrong. I think it's diamonds for Sonia, right?
I was just going to say that. You actually read my mind.
All right. But, point taken, Sanjeev. I mean, as they say, right, when you sell, if even from a longer term perspective, if you're trading, it's another thing. You buy, sell all the time. But if you sell in a portfolio, you got to take 2 decisions. You got to decide to sell, and then you got to get the buying also right. It becomes that much harder in that sense. But Sanjeev, since you do this, as you said, 365 days, 24 hours, tell us. I mean, so you kind of call out tactical moves, etc. as well. As Sonia said, what beyond these highs? I mean, will we continue to push higher all the way to 20,000 kind of levels on the Nifty? Or as you, I think, an interaction back said, maybe middle of June or something, we'll see a bit of a shakeout.
Yeah, so if you recall some time back, few months back, I told Sonia when there was a lot of pessimism, we will hit 21,000 after April. Now, July, August is something, or maybe September, where I see that coming. We will see a sharper than expected correction, maybe second half of June. That is when you take some chips off the table. But like I said, the corrections are part and parcel of the process of, greed and fear. And that is not generated by anybody. So right now, the greed part is so high that you want to own stocks. And Prashant, I tell you, I travel the length and breadth of the smaller tier 1, tier 2 cities. People are taking to equity like never before. In my 34 years, I've never seen that. That is why I tell you that the real money is being generated in tier 2, tier 3 cities. We sit in large air-conditioned offices and glass houses. We don't see where the real ships are coming. And that is not going to, that's a trend which is not changeable. It's irreversible. Hence, I think that the longer-term story of 21,000 in this year remains. We will see a sharper than expected correction in the second half of June. But let's take it as it comes. Let's enjoy the good time, Sonia.
All right. I mean, that's an important point. Retail participation is it's a 2-year-old phenomenon, at least at these levels, so that wall of money is there. It doesn't let the market slip in any very substantial way, as we've seen over the last couple of years now. Sanjeev, stay with us. There is, 15 minutes to go for the pre-open session. So let's take that break. We are back. We'll also have Anu join in with a quick check on things as he's seeing the market. And, of course, our technical trades, etc. follow. We're back.
दुनिया में कुछ लोग कहते हैं और कुछ लोग करते हैं। जब कहा गया देश में सोलर पावर सफल नहीं हो सकता, तो हमने सुना नहीं, उसे सफल कर दिखाया। कहा देश का सबसे बड़ा पावर प्लांट बनाना इम्पॉसिबल, तो हमने पॉसिबल कर दिया। बोला कोने कोने तक बिजली पहुंचाना किसी के बस की बात नहीं, हमने पहुंचा दी। सवाल उठे एनवायरमेंट फ्रेंडली गैस सब तक कैसे पहुंचेगी? हमने वो भी पहुंचा दी। कहा तो ये भी गया पैकेज फूड बिजनेस हमसे नहीं हो पाएगा, लेकिन हमने कर दिखाया। बातें उठी सीमेंट सेक्टर में हम कभी स्ट्रांग नहीं बन सकते, तो हमने सुना नहीं, बन के दिखाया। चर्चा हुई देश में इतना बड़ा पोर्ट बनाना असंभव, हमने संभव कर दिखाया। और जब कहा गया देश के एयरपोर्ट्स इंटरनेशनल स्टैंडर्ड्स के नहीं हो सकते, तब भी हमने सुना नहीं, कर दिए। मुश्किलों की नहीं सुनते, हम करके दिखाते हैं। अदानी, हम करके दिखाते हैं।
I'm a chameleon. It's my job to change color. But your wealth manager, well, they shouldn't be copying me, you know. You know that. Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Welcome back. Well, the S-Shakes is indicating a bit of a positive tick, but a good time to get in Anuj to tell us how he's reading trade setup. Well, Anuj, the call yesterday worked, right? Take some money off the table. You could have booked out in the first 5 minutes and enjoy the remainder of the trading session. Today, what's the call?
Morning, Nigel, Sonia, Prashant. You know, for me today, it's a bit of a nostalgic day. I consider market like, I was in college when, if there's a bus which is going and, whether I want to chase that bus or wait for the next bus. Depends on, whether I'm in a hurry or not. If you're in bus, say since 17,000, then I think you're okay. You want to stay on and see till where this bus is going. But if you miss the bus, then I think no point chasing it because you run the risk of falling and you'll miss the next one. So the better thing would be to wait for the next one. That would come shortly. And that bus would come if, your Nifty gets to, say, 17,450 thereabout, 18,450, sorry, my bad, and Bank Nifty around 44,000. Because right now what you have is very close logical targets for both Nifty and Bank Nifty. I mean, 18,650 for Nifty and 44,500 for Bank Nifty. Max you can extend it to 18,700, 750 on the Nifty and 45,000 on the Bank Nifty, at which point the market really becomes very expensive. Even fundamentally, it becomes very expensive. Price to earnings wise, Bank Nifty becomes very expensive at 45,000. So from the risk reward point of view, you want to wait for, say, 18,450 or 44,000. That could happen in June. Either could be monsoon issue, could be the debt ceiling, one more googly maybe. You never know. The opportunities could come. Now, this FI buying yesterday, 1758 crores. Obviously, there were a couple of block deals, but there was delivery buying of 2,500 crores in HDFC Twins. X of that, I didn't see any other stock where you saw, quite a bit of buying. So there's a risk that the market goes to distribution. The advance decline yesterday was 1.2:1. So keep an eye on the advance decline. That could give you an indicator of whether the market's ready to move on from here or wants to go into some kind of a profit booking phase. On the Nifty yesterday, as we discussed, the open was the high and it traded in a 60-point band. The range is, yesterday's range to begin with, 18,581 to 18,641, and bigger range is 18,500 to 700. And one more thing, like we discussed yesterday, keep an eye on the IT stocks because they led the rally, and yesterday they led the profit taking in the first hour, in the last hour as well. The Bank Nifty still remains strong, and my sense is there's one more swing left to 45,000.
However, for near-term traders, maybe it makes sense to book profit at 44,500 to 44,750 and keep an eye on HDFC Bank and ICICI Bank. Both are showing some divergent trends.
So basically, don't chase the bus and let it go. Another bus will come.
The next one will come. The next bus always comes. You have to wait.
You only chase buses in college. I thought you chase other things in college, right? That also keeps changing.
I don't think we should discuss that on national television, Sonia. But
people on buses.
People on buses. And the next one always comes along.
The next
right?
one is always there. Yes, absolutely.
All right, Anuj, thanks a lot. Have a good one. Well, we have about 10 minutes left for the pre-opening rates to kick in. Sanjeev Bhasin is still with us. Sanjeev, you agree with what Anuj is saying? I mean, there's always another better bus that comes along. And if you had to use this analogy in terms of individual stocks, what would it be?
Well, there are no buses in play now. It's airplanes, Sonia. It's airplanes. Look at the traffic. Yesterday, I attended the GMR call. I have a lot of clients who were on it at 35 rupees and they were a little disappointed. But the call was a soother. They told us that there was 80% of the loss was more of a one-off as regards debt repayment or debt churning because they raised debt at lower rates. Hyderabad legal charges. And thirdly, they indicated how they've reduced debt and now this was just a one-off. Fourthly, Hyderabad is now gaining 17% market share between Bangalore and Hyderabad. Hyderabad's international travel is growing. In Delhi, the land parcels are on the verge of development. And you've seen the type of footfall which they have seen as far as volumes are going. And like I told you, nobody leaves the airport without 2 bottles of Black Label, and particularly Nigel, he may be getting in 4 and some chocolate. So you can see the add-on revenue. So I think GMR is a no-brainer at 40. I have a target of 65. In September, the capex in Delhi starts to churn returns. And I think that, like you said, there is no buses now. It's more on airplanes, on how fast you can travel, because cost of entry of the middle class is rising superbly. The other play is a contrarian stock called ABFRL. I think the Pantaloon, Louis Philippe, Peter England brand is playing out brilliantly. The recent acquisition means that they are getting more foothold. And this is the masses. So ABFRL at this price gives you a very good entry point into change of cotton wear and so on and so forth. The last 3 have been my 3 picks which I've given you. At 70, I told you Piramal Pharma will be an outperformer. Results were far ahead of street. Look for 120. 127 is where the promoters have issued warrants. And 2 more stock, Kempla, Sanmar, one of the biggest players in PVC resins, and Jubilant Ingrevia. These continue to be my outperforming 5 stocks. But GMR, ABFRL are the picks for today and the next week and the next month.
All right. Hi, morning, Sanjeev. Looking forward to having a single malt with you sometime, but we'll keep that at the side for the time being. GMR Airports, congratulations on that call on Piramal Pharma. It's worked quite well, and you're saying that higher levels are coming. But on GMR Airports, the street yesterday was quite disappointed with the numbers. But you believe it's a good entry opportunity going by what they said on the call? Just want to clarify that point.
Correct. Nigel, by the way, I am a teetotaler, but I will enjoy the single malt and with tea with you whenever you say A. B, I think GMR numbers were very, very, like I said, on the face of it, the numbers portrayed something, but 80% of the loss was a one-off. And they've specified that it was legal cost, it was a rollover of debt for which they had to pay an additional charge. They've raised debt at a lower rate. And thirdly, it was some of the, they had an arrangement with DIL of sharing, and those revenues from April 22 have been accounted for. So 1 year's charges have been accounted for. There was a forced demurrer when COVID was there and so on. But all that is wiped out. All that has been written off. Now they are indicating that by the way, on an EBITDA level, both Hyderabad and Delhi have shown an 18% growth. So I also digressed that. I went through the conference call. I asked the question. That's why I'm enlightening you that this was a one-off and maybe you should take this as a buying opportunity. I still think that the best play in India is air traffic. And if you don't own Indigo, then the best way to play is GMR because they get money on any and every count which they have. The land expansion as far as AeroCity and the tracks which they own with Bharti developers is going to be the huge game changer on the, which is the cherry on the icing.
All right. Sanjeev is not chasing buses with 4 wheels, but he's chasing Airbuses, right? Sanjeev, it's a pleasure. Great to speak with you. And thank you very much for being on the program once again with that perspective. Well, let's get some technical perspective in as well. Mitesh and Sudarshan are with us with their perspective on things. Gentlemen, good morning. Good to have both of you here. Sudarshan, how are things set up? How's the Nifty sort of looking? Bank Nifty yesterday into the close, there was a little bit of pullback, a little bit of profit booking. How are things looking to you now?
Yeah, good morning. See, the Nifty is in an uptrend, so we don't challenge that uptrend. And it's never a good idea to say this far and no further. Yesterday, I suggested, like Anuj had done, to take profits. And that was not because the trend was ending. It was simply because we had such a sharp up move in the last 3-4 days. For a short-term trader, taking profits was the most sensible decision. But if you get an opportunity, the key here is to re-enter that trend. Unless we are thrown out, we have to keep on buying. How do we do that for the day? I think from the open, if the Nifty has a correction of about 100 points, see, can't be so exact, approximately 100 points from the open if the Nifty falls, then go long there, keep a tight 75-point stop loss, and then stay on the long side for a run again tomorrow or day after. The Bank Nifty is a complete avoid.
Oh, Bank Nifty is a complete avoid. Okay, I guess at elevated levels, better to be a bit cautious. Got that. Mitesh Thakkar is also with us. Mitesh, morning. What do you do now? If someone has, completely missed the bus, is there still more to go on the upside? And for today, what's the strategy?
Good morning. If somebody has missed the rally, then I think entry at higher levels is always riskier. So in that sense, I'll agree with Sudarshan. I think buy on declines. But a good idea for a trader, is to just trail your stop losses. I think 18,500 was the last pivot, and we should keep a stop 10-15 points below that on the Nifty. And on the Bank Nifty, we managed to get past the 44,150 mark. So around 44,050, 44,070 zone becomes your stop loss area. So as long as these levels are not being violated, good chance that with some choppiness, the markets will make fresh highs, and therefore you will get chances to keep trailing your stop losses. So the trend is on the upside. Fresh buying is on declines, but yeah, I think somebody who has positions like a lot of us would be having, I think trading the stop loss is the best idea.
What about individual stocks then? Let's get down to that. Sudarshan, what would be on your list today?
Well, I start with Bharat Forge. It had a very good day yesterday, and that breakout came after a trading range of almost a month. So Bharat Forge is a buying opportunity with a stop under 765. India Cement, actually, Sonia, all these stocks had a good day yesterday. So there's no need to qualify that. India Cement is a buy. That small dip may be getting over. Buy with a stop under 187. Siemens is an intraday short. It had big declines, maybe on the back of results news. I don't know why. But now it's an intraday short with a stop above 3550. It is my only shorting idea. Titan is again making new highs. Buy Titan. Stop under 27.45, but it's preferable to keep Titan as a positional trade.
Mitesh, what about you? What are your trades?
Morning, Prashant. I have 3 buys to a sell. I think Bosch is the only sell call. Yesterday had a big negative red candle, strong kind of a breakdown. They should see more follow through, and the stock I'm expecting it should hit about levels of 17,700. So sell here with a stop at 18,600 or just about that. On the buying side is IRCTC with a stop at 633 for a target of 675. Tata Power is a buy with a stop below 214 for targets of 226. And Hind Copper is a buy with a stop at 106 for targets of 115.
By the way, Mitesh, I suspect you were up all night. Watched the full IPL. Did you? I mean, there was that.
No, I didn't. I watched the I watched the first innings and then I got very tired. I went to sleep.
I see. I saw a nice big yawn right there. I said, Mitesh needs some coffee and perhaps, it's been a long night. As it is true for so many people who are, I guess, tuning in, right?
I just realized we may not have too many viewers of our morning show today because half of the country...
I was wondering that, right?
Okay, we have to take a short commercial break, though. We'll, take a quick break, be back. We have the pre-opening rates. We'll also have Devansh Jain of Inox GFL Group to talk about the government waiver of the interstate transmission fee on offshore wind projects. Stay tuned for that.